Have you ever felt like building wealth is impossible when you are earning minimum wage, especially with the rising cost of living in the United States? It is a common misconception that you need a six-figure salary to become financially free. But the reality is that wealth is built through consistent habits, smart budgeting, and making your money work for you, regardless of how much you earn. In this video, we are going to break down actionable, step-by-step strategies that anyone earning the minimum wage can implement today to start accumulating wealth, breaking free from the paycheck-to-paycheck cycle, and turning a modest income into a solid financial foundation. Whether you are looking to start an emergency fund, invest in the stock market with as little as a few dollars, or increase your earning potential, this content is designed to give you the exact blueprint you need to create a secure financial future and make your money grow. Part 1. Budgeting and living below your means. When you are earning a minimum wage, every single dollar matters, and understanding where your money goes is the first step toward building wealth. A zero-based budgeting system is one of the most effective ways to manage a tight income because it assigns every dollar a specific job before the month even begins. To do this, you list all of your income and then subtract your expenses until the total equals zero. This method prevents you from overspending on non-essential items and ensures that your basic needs like rent, groceries, and utilities are covered before any discretionary spending occurs. By keeping a close eye on your monthly cash flow, you eliminate the guesswork and take control of your financial life, laying the necessary groundwork for future investments. Living below your means requires a fundamental shift in how you view your everyday purchases and distinguish between absolute necessities and temporary desires. This does not mean that you have to live a miserable or restrictive lifestyle, but rather that you prioritize your spending based on what truly aligns with your long-term goals. Even a minimal income can be stretched when you start negotiating utility bills, canceling unused subscription services, or choosing generic brands at the grocery store. When you are earning minimum wage, adopting a frugal mindset is not about deprivation. It is a strategic choice that allows you to free up capital that would otherwise be wasted on impulse buys or convenience charges. To make this budgeting strategy work in the real world, you need to track your daily expenses consistently, either using a mobile application, a spreadsheet, or even a simple physical notebook. Tracking allows you to identify hidden leaks in your budget, such as daily coffee runs or frequent fast food meals that collectively drain your bank account over a month. Once you recognize these patterns, you can redirect those small amounts of money toward your wealth-building goals instead of leaving them in the hands of major corporations. Consistency in reviewing and adjusting your budget every week will transform your financial habits, showing you that it is indeed possible to save money and grow your wealth on any income level. Part 2. Building a starter emergency fund. An emergency fund acts as a financial shield that prevents you from falling into high-interest debt when unexpected expenses arise, such as a sudden medical bill, a car repair, or a temporary loss of work hours. For someone earning minimum wage, an unexpected expense of a few $100s can be devastating without a proper safety net, often forcing individuals to rely on credit cards or payday loans that trap them in a cycle of debt. The immediate goal should be to accumulate a starter emergency fund of $1,000. This amount is sufficient to cover most minor day-to-day emergencies and gives you essential peace of mind while you work on building a larger safety net that covers 3 to 6 months of living expenses. You can accumulate this money by saving a small portion of your paycheck each month and placing it in a separate account where it remains both safe and accessible in case of an urgent situation. Accumulating this initial amount requires intentionality and a strict commitment to prioritizing your financial security over immediate gratification. You can set up a direct deposit system where a fixed percentage of your paycheck goes straight into a dedicated high-yield savings account before you have the chance to spend it. Even if you can only afford to save a modest amount each week, consistency over time will yield significant results and create a habit of paying yourself first. It is important to keep this money separate from your main checking account to avoid the temptation of using it for non-emergency or discretionary expenses. By treating this fund as a non-negotiable monthly bill, you make the process automatic and remove the emotional struggle of deciding whether to save or spend during a given pay period. As your financial knowledge grows, you should look for ways to make that emergency fund work for you, even if the balance is still relatively small. Moving your starter fund into a high-yield savings account ensures your money is not losing its purchasing power to inflation while remaining completely liquid and ready for any unforeseen circumstances. Many online banks offer interest rates that are significantly higher than traditional brick-and-mortar institutions, allowing your balance to grow passively in the background. This process teaches you the fundamental concept of making your capital work for you rather than letting it sit idle. Building this initial fund creates a stable financial foundation, allowing you to move forward and focus on investing in the stock market without the fear that a single life event will completely wipe out all your hard-earned progress. Part 3. Investing in the stock market with small amounts. Building wealth does not require having thousands of dollars up front to invest in the stock market, thanks to modern financial technology that allows for the purchase of fractional shares. Fractional shares enable you to own a piece of high-value, well-performing companies or exchange-traded funds with as little as a single dollar. For individuals earning minimum wage, this changes the game entirely because you no longer need to save large sums to start growing your money. By participating in the stock market, even with micro-investments, you put the power of compound interest to work on your behalf over the long term, ensuring that your capital multiplies instead of being eroded by inflation. Diversification is a critical concept to understand when investing small amounts, as putting all your money into a single company or asset carries significant risk. Broad market index funds and exchange-traded funds offer an excellent strategy for both beginners and intermediate investors because they pool your money to buy a basket of hundreds of different stocks. When you invest in a fund that tracks a major index, you are effectively betting on the overall growth of the economy rather than the success of one specific business. This lowers your risk profile while still allowing you to capture solid average market returns, making it an ideal approach for building long-term wealth on a limited income. The most effective method to utilize when investing small amounts of money is dollar cost averaging, which involves investing a fixed sum of money at regular intervals regardless of the market price. When the stock market drops, your fixed amount buys more shares, and when the market rises, it buys fewer shares, ultimately evening out your purchase price over time. This removes the emotional stress and the need to time the market, which is a trap that even experienced investors struggle to avoid. By consistently putting a small portion of your paycheck into the market month after month, you build a resilient investment portfolio that will grow substantially as your earning potential increases over the years. Part 4. Increasing earning potential through upskilling. Relying solely on cutting expenses has a limit, and to truly build significant wealth while earning minimum wage, you must focus on expanding your earning capacity through upskilling. The modern economy rewards specialized knowledge and practical abilities, meaning that acquiring new and highly demanded skills is one of the highest returning investments you can make with your time. By dedicating a few hours a week to learning skills, such as digital marketing, coding, data analysis, or a specialized trade, you position yourself to transition out of entry-level positions and into higher-paying roles. This approach allows you to break the barrier of a fixed hourly rate and opens up opportunities for rapid income growth that you can later leverage into wealth-building assets. Acquiring these new skills does not require going back to school for a costly degree, as there is an abundance of affordable and high-quality educational resources available online. Platforms like Coursera, Udemy, or even free resources on YouTube offer comprehensive courses and certifications that are recognized by employers across various industries. You can dedicate your free time after work or on weekends to completing these certifications, slowly building a portfolio of practical knowledge that makes you more valuable in the job market. Treating your education as an ongoing process rather than a phase that ends with formal schooling ensures that your skill set remains relevant and highly competitive in a constantly evolving economic landscape. Once you have developed these new skills, the next step is to apply them effectively to negotiate a higher salary or to transition to a better-paying company. You can update your resume to highlight your newly acquired certifications and demonstrate to potential employers exactly how your skills can solve their business problems and increase their revenue. Alternatively, you can use these skills to start a profitable side hustle in your spare time, which generates additional income streams without requiring you to quit your day job. This combination of increased primary income and extra side earnings creates a powerful financial engine that supercharges your savings rate and accelerates your journey toward financial freedom. Part 5. Automating savings and investments. Removing the need to manually move money every month is the key to ensuring consistency in your financial journey. When you are earning a minimum wage, relying on sheer willpower to save or invest after paying all your monthly expenses often results in having nothing left over to contribute to your financial goals. By setting up automated transfers from your checking account to your savings and investment accounts on the exact day you get paid, you are prioritizing your future self before any discretionary spending occurs. This behavioral finance strategy, known as paying yourself first, guarantees that your money is put to work without requiring you to make the active decision to save every single week. The process of automating your finances is simple and can be set up in just a few minutes through your online banking or investment platform. You can designate a specific percentage or fixed dollar amount of your paycheck to be automatically deposited into your high-yield savings account or an automated investment portfolio. Once this recurring transfer is active, you do not have to worry about manually logging in and executing the transfer, which minimizes the risk of forgetting or making excuses to skip a month. It creates a friction-free system where your wealth accumulates in the background while you focus your daily energy on increasing your income and learning new skills. Over time, these small automated contributions take advantage of the power of compound interest, transforming minor amounts of money into a substantial financial portfolio. Even if you start with just a few dollars per week, the consistency of these automated investments means you are continually buying assets through market ups and downs. This discipline prevents emotional decision-making during volatile market periods and ensures your portfolio grows steadily without your active intervention. By building an automated system, you lay the final piece of the puzzle that turns an entry-level salary into a long-term engine for creating wealth. Building wealth on a minimum wage is entirely possible when you commit to smart budgeting, establishing a starter emergency fund, making small and consistent investments, and actively expanding your earning potential through new skills. By taking these actionable steps, you are breaking free from the paycheck-to-paycheck cycle and laying a solid, resilient foundation for your long-term financial freedom. If you found this information valuable and want to continue learning how to make your money work for you, be sure to subscribe to the channel so you do not miss any of our upcoming videos. I would love to hear your thoughts and see your commitment to your financial goals, so please leave a comment below with a phrase that resonated with you, such as "My financial independence starts today," and I will see you in the next video.